I wanted to have Gary Norris on here because who often gets opportunities for commercial deals, but you walk away because you're not quite sure what to do? Like, has that happened to anybody on this call? Is that something
Yep.
that I mean you could take advantage of, right? So, I did commercial lending prior to 2011, and that's when I got into the business in 2001, and I tried absolutely everything because I was just trying to make a living. And then the residential side picked up to a point where I'm like, man, I just need to focus on what I'm really good at was residential. Well, then when residential kind of slowed down over the past 5 years, I hopped back into the commercial arena and I got in over my head on a deal. And I started asking people like, who can help me with this? And a guy pointed me towards Gary Norris. He goes, look, he's been doing this for 30 years. And I called Gary, and Gary's like, yeah, I got you. And he got the deal closed. And then there was another time where I was golfing with a friend of mine, and my friend owns 7,200 units, right? So he buys hotels, turns them into apartment buildings, and then rents them out. And as we're golfing, he's telling me he needs a $48 million loan for his 500 unit building. And I go, give me a minute. He goes, Jeff, can you help with that? Because I know you're the money guy. And I said, well, let me call a friend of mine. I call Gary. Gary goes, yeah, give me a minute. Gary ended up getting funding for it. Like, so whether it's somebody buying land, somebody buying a single family resident, they want to put in an LLC, somebody buying a strip mall, like whatever it is, commercial lending wise, Gary can handle it. And he doesn't back down from it. So I wanted to have him on here because there are opportunities around for all of us to take advantage of, and you don't have to walk away from it. So you don't have to know the answer right on the spot, but you could say, hey, you know what? Let me get back to you on that. So I want to have Gary on here so he could talk to you a little bit about commercial lending, what that looks like. It's not as scary as you think. And then hopefully, you can help other people with their commercial deals, and you can help yourself. You can get paid for it. We got another one that came through just a couple months ago. I didn't see a way for it. Gary at first was like, I don't know, but he goes digging, and Gary can get into more detail about it. But this lady's going to end up buying a building. He found her like grant money to like cover her down payment. I think she's doing a purchase with getting cash back. And there's no payment on the grant money for a couple years, and she's buying like a
Wow.
$750,000 commercial spot. So commercial's not like residential. Like in residential, we take a loan application. Does it check the boxes? Do you qualify? Yes or no? Commercial's a whole different beast. And so it really comes down to the loan officer themselves, like Gary, packaging it up and setting it in front of the banker, and then for that banker and their board to make a determination on whether they want to lend on that or not. And so that's the piece where Gary comes in and does a phenomenal job. It makes it easy for everybody. So, Gary, with that, have at it.
Hey, Jeff, thanks for having me. It's wonderful to have this opportunity to have a chat with everybody. And I'm the owner of a company called Commercii Advisory Services. And one of our lines that we offer is commercial debt placement or commercial loan brokerage. And as Jeff alluded, it is different than residential. In residential, obviously, you have to have an NMLS license. In commercial, there are no licensing requirements in Pennsylvania. As for myself, I have over 30 years in either public accounting, banking, and commercial lending, and also business brokerage experience. So I've done just about any kind of small to mid-sized business loan and a pretty wide variety of commercial loans. So really with commercial lending, it is very different. Where like Jeff, someone comes to Jeff with an application, they put it in the system, you get the DULP findings. It's more, I would say, objective, where when you get into commercial, it becomes very subjective. And I tell Jeff, can you get this deal done? I said, well, it depends. Every deal, every loan, commercial loan is a lot different than the other one. And because you're going to have maybe a different type of property. Do you have tenants? Is it an owner-occupied property? Is there an SBA loan out there for that opportunity as well? So it really depends, industry type. If it's investment property, who are the tenants? Do you have credit tenants versus mom and pop tenants? Do you have, leases coming up that are going to expire and are material to it? So there's really a ton of moving parts in the commercial world. So it's really having that great conversation with a borrower. And I'll just use an example here. Jeff called me on a young lady in business starting in 23. just moved to Pittsburgh in 24. He says, hey, they're looking to buy this building. Can you help? But they don't have any money. So they actually are asking for this at a very sweet spot in time. They did very well financially in 24. It is a building that there's going to be a tenant upstairs. They will be downstairs. And so there's an opportunity twice a year. There's a program called the BOBIE program, BOBIE, and it's through a conventional lender is the first piece, and then the Federal Home Loan Bank comes to market twice a year. And this is kind of like it's not technically a grant, but it's a loan, but they also score the loan. So I'll just kind of keep it pretty simple, is the lender's going to take 80% of the purchase price on the real estate, and this loan is going to cover working capital, the remaining 20% down on the real estate, and we're also covering improvements. So they need to do a roof and windows. So we're, instead of using an SBA vehicle where there could be 10% down or potentially more, they're going to literally just have out of pocket the appraisal and any other third-party services if they need it. And they will get a check back at closing for the appraisal. I did one of these last year, and it was a similar situation. A lady looking to go from renting to buying. The first loan is going to be a 25-year note, 5-year rate lock. The second note is going to be 0 interest, 0 payments for the first year. And that's important because that's going to let her business grow. And then the second year is at 3%, and that's on a 10-year amortization, and year 3 is at 6%, years 3 through 10. So what that's going to allow her business to do is actually grow into the space. Eventually, they'll remove the tenant upstairs, probably after like 2 years. So, I was able to work with one of my contacts at a lender. So honestly, kind of the secret sauce of commercial lending is knowing who the lenders are, how to talk to them, how to set up an opportunity or a loan that makes sense. So I kind of go out to the market and talk to all the lenders that I work with and try to figure out who the best one is. And
And
so,
Gary, with
yeah,
that said, on the commercial space, like what do you see typically? What's the typical down payment needed? Like I know this one was different, but
yeah,
like
yeah.
on commercial, what do you typically see? And can the income from the property be used to help qualify the customer?
So if you have pure investment property, then that's typically 20% down. And yes, obviously the cash flows from the tenants are going to qualify that. If you get into something that's owner operated or owner operated a piece and then rented to other tenants, that will depend. If they're putting 20% down and they want to go conventional in that case, where you're in the building, you're the owner of the building, you run a business out of it, but you have tenants. If you can get 20% down, you could typically go conventional. I do have some lenders that can go as little as 15% down in that scenario. There's a few lenders that will allow that. Once you go owner occupied and go into the SBA world, if you need the SBA will not qualify the tenant income as part of it. They're going to look for more of the business cash flow, but they will allow the tenant income to also kind of help supplement it at the end of the day. So it's a little bit complicated, but the short answer is if you're going to own a building, do an SBA loan in it. And SBA is only available for owner occupied. You cannot, have like 80% of the tenants or 75% have it be tenant occupied. It has to be 51% owner occupied to be considered for SBA. There are occasions in the SBA where some lenders will go to 100%. So, there's a lot of myths around the SBA, but the reality is it depends. You have to know what lenders will do what type of structure. So if you can think of like your table in front of you of all the SBA rules, some lenders may only be half of those rules. They underwrite it tighter. They don't have to underwrite it all the way to the extent. So I work with a variety of lenders, some that go all in and some are maybe a little more conservative. But at the end of the day, it's really finding out who the best fit is for somebody. A quarter point here or there is not going to kill a deal, because if a quarter point kills your deal, you probably shouldn't be doing it.
Right.
A lot of time it's just finding the best fit and also who can grow with somebody. So I was a commercial lender for 10 years with a couple of banks, and I've been brokering commercial loans over 20. So I was a
Now,
CFO of a bank too at one time.
the other thing is, does the property matter? Like, what if somebody's buying like a pizza shop with apartment buildings above it? Somebody's buying a funeral home. Somebody's buying a strip mall. Like,
Yeah, yeah.
does the lender matter on the type of property that they're buying?
It sure does. Some lenders may not want to do restaurants. There's a lot that won't do hotels, motels. You can have special use properties. So you think, ice skating rinks, um, self-storage, which is actually eligible for SBA, which is a weird thing because it's pretty much rented income, but somewhere I think somebody lobbied and won that battle to call it an owner-operated business, but it does qualify for that. You can have nuance with things like if you have a hair salon or a tattoo shop, if people rent the chairs from the owner, that's actually makes it ineligible for SBA lending. But if they pay the people a W-2, it's eligible. One is considered passive income rent, renting the chair, versus active income paying a W-2. So there's a ton of nuance
Wow.
to the commercial lending world. And different lenders kind of have their different take and different flavor. One was during the pandemic. I had a lender that loved retail and hated apartment buildings. So they wouldn't lend on anything that was like multifamily or whatever. So everybody, I say banks are like Baskin Robbins. What's the flavor of the day?
Right.
And and it can actually change, within a lender over the course of a year. They might get too much of one type of property in their portfolio and have to cut back.
So and tell me if it still stands. So I had a customer that had, I think it was 8 units, but two of them were Airbnbs,
Yeah.
and Dollar Bank won't touch it. Like, they don't want anything to do with Airbnbs, regardless of the profitability of the property or not. Is that still a thing? Like, that's
Oh
like
yeah,
a
it's still a
nuance that,
thing.
yeah.
There are some lenders that will specialize in Airbnb.
Okay.
I actually have one lender that will look at an Airbnb as a going concern and actually give it business value. So it's all over the place,
Okay.
But the mindset there is this. Airbnb's different than like a monthly rental. So lenders would give maybe what a fair market value of rents are, but not the value of a full-on Airbnb rental. Because obviously, if you're heavily occupied in your Airbnb, you're going to get higher than you would on a monthly rent.
Okay.
So I have one lender, one or two that will do it as a going concern and say, yeah, we'll give you credit for, the fact that you are running it as a business, but most of them will not. And that's where you pull in some of these debt service coverage lenders and things like that. They're not as concerned. They're more concerned with your credit, your personal cash flow than what's coming into property. So
And I'm glad you brought that up. And the one thing I want to say for everyone in the room, if you want to ask a question, just throw it in the chat or raise your hand, because we want you to get the most out of this. Because if you're here wanting to hear and learn about commercial lending, like, please ask the question so you can get your question answered by Gary while he's here. But you brought up something I was going to ask you about as well, Gary. You said DSCR, right? Because that's like a buzzword that everybody's like, hey man, how do I buy a house DSCR? Because then I don't need any of my income to qualify. Can you get into that a little bit, like how that
yeah,
works?
to be honest, Jeff, I don't get into a whole lot of that because usually the rates are pretty high, and where cap rates are, it can be difficult. I would say there's a time and a place for it, and I would
Okay.
probably use that more as a bridge, like especially if you have like value add and things like that. Go in, do your value add, and then get back out of it, because you're just going to get hammered on rates
Okay.
generally. But it's a great tool. Personally, not a big fan of it, but that's just my personal opinion.
Yeah.
But
Yeah.
I just think you should probably come into it and just try to go conventional the best way you can.
Well, like, just like anything else, right? The headlines on the social media is like DSCR is the way to go. Like, you don't need a job, you don't need any income. You can just buy a property, let the income that's being produced off the property pay the loan, and the bank's just going to give you the money. And those are the phone calls I get. Like, I want a DSCR loan for these reasons. But I love what you said. Like, use it so you can increase the value of the property, then get the right loan that you need at that time. Yep.
Yeah, yeah, yeah. Anybody have any questions? I mean, it's a whole world to it, but it's important to have somebody on your side who truly understands the commercial nature of things. So, I'm assuming, Jeff, you have a lot of real estate agents out here too.
Mm-hmm.
And I've worked with several over the years, and I'm actually able to help them get their opportunities done Especially if you get into something where it's maybe not super vanilla in nature, you know.
So go ahead. Go ahead, Kathy.
Yeah, Gary, I really would like to get in touch with you. I have a client that is trying to purchase an 8 unit property, and he's meeting with such incredible challenges. And this young man is very successful. Okay, he owns about 12 properties
Mhm.
and never late on anything.
Hmm. Okay. Yeah, is he going back to his same bank, or is he tried different places?
He tried 2 different places.
That's odd. Yeah, sometimes what happens is, especially with like the regional banks, once you get to about $1 million in exposure, they
Yeah,
don't want to. That's typically where you have a loan committee come in, and they don't want to go above that.
yeah,
So they like to do that. But I'm happy to work with them. Like I said, it's good to have someone like, Jeff and I in your corner, because we can actually help them expand their stable of lenders that they can talk to. Jeff sent me a guy that was looking to buy a pizza shop, and he has no money, was going to leave his day job, would have no income outside of that.
uh-huh.
And I just told him, I said, man, I just don't know a world where this happens unless you're willing to put your house up. And he goes, well, I'm not going to do that.
Yeah.
And he goes, honestly, he goes, thank you for your honesty. He's like, I've had bankers just like send me paperwork, they don't call me back. And my pet peeve is if it takes 6 months, well, no, I'll eliminate that lender in a heartbeat, because I work with people that know their banks, they know their credit officers and their appetite, and so we can quickly get through. I'll call it all the hair on the deal faster.
Yeah,
So part of this is about just, being full disclosure and having transparency up front with a lender. Because if you try to hide something, they'll find it. I mean, they Google everybody's names, right? So
yeah,
so oh, you were involved in this or that. They won't touch you, and they're allowed to not do that.
yeah.
Unlike residential, commercial, if they don't get a feel for your character, they find things that question your character, they will walk away in a heartbeat. And
Okay,
rightly so. Yeah. Yeah, I
okay,
put my contact in the right-hand side there.
okay.
Yeah, Kathy, his contact's in the chat, but I'll text it to you.
Yeah.
Sounds good.
Yeah,
Yep.
Perfect.
thank you. Thank you, Kathy.
Thank you.
And Gary, to your point, like I followed up with the realtor that referred that person over,
Uh-huh.
and I let them know, the other advice you gave them, you didn't say no, because the one thing on our team is we never say no. The answer is not right now, but here's your game
Yeah.
plan. And you did the same thing. You were like, hey man, why don't you open up a parking lot, sell your food, see if you get demand for the food first, build some income off of it, and then look at buying a building. And he appreciated that. He ran back to the agent and told him that that's the advice you gave him,
Yeah. Oh, that's good to know.
versus just blowing him off, not talking to him, or giving him any steps forward. Because this is what this guy really wants to do. It's his passion. The other question I had here, Lori, I'll put it back in the chat here. The other question I had is, so with residential lending, we take an application up front. We get all the documents in up front. We don't just take a verbal application. We review everything. We underwrite the file, and then we walk through the options with the client. So we know out of the gate. And Corey Beadle, I'm going to call on you. I don't know the last time that we got somebody under contract and it didn't close, like a denial rate. So we do all. I'm too old to be given last minute denials, like right before closing, after they spent money on hand money and appraisal, and their hopes are up that they're getting their new home, to say that you're denied. So we do all of our work up front. With commercial lending, like what's the denial rate on commercial lending? And then after you take an application, what's the chances of them getting to the closing table?
That's a great question. I'll just say it depends. So, unlike Jeff, where he has a system where you can put an application in, we're going to get, 3 years bank statements on or 3 years of tax returns on the buyer, a personal financial statement, and then depending on the nature of the commercial property, it could be rent rolls, leases, profit and loss statement, tax returns on that business entity. And then from there, I take a look at it, ask a lot of questions, depends on the nature of the deal. And then I take that information and I'll talk to anywhere typically to 3 to 5 lenders, just because if you get too many chefs in the kitchen, it just blows up. So I've been doing this long enough that I know who to talk to about what types of opportunities and loans and structure. And then from there, I'll kind of walk through, I'll send them the information, they'll review it, maybe go to their credit officer if they need to come back. And they'll say, hey, this is where I maybe see some hair on the deal. How do we mitigate it? Things like that. But I've been doing this so long, I'm pretty good at getting through those things very quickly. But what we want to do is essentially have like a pre-screen with the lender and perhaps even their credit officer if needed. And then if they like it, they will issue a term sheet. So one thing you're not going to see in commercial is a pre-qualification letter. So if you're working with a seller's agent that says, I want a pre-qual letter, that really doesn't exist. Because if you think about it, if you're look at buying apartment building A that's an 8-unit, and then you go take it to another property that maybe has 3 retail on the bottom and 4 apartments on the top, it's a completely different transaction, versus residential where all you're doing is you're just substituting the house, yet all the cash flows are going to stay the same because of the buyer's income doesn't change. Does that make sense?
Yep.
Yeah.
Yep.
So that's the nature of why they won't do it. The other thing is it costs the bank a lot of money to underwrite a commercial loan. So before they send it to an underwriter or through an analyst to have it spread and credit pulled and all that, they want to make sure that the buyer and the seller are on the same page. So at least they will want to have at least a letter of intent that's fully executed or a purchase agreement executed before they will put it in underwriting. So you're going to have a period to gather information, get it pre-screened, go over the options with the borrower, and then once everything is signed and information received on the seller side, submit a full package. So I always say it's like you don't take your car to the mechanic and let it sit all day and say, yeah, have at it. We want to get in and out. We want to identify where the risks are in the deal, how to mitigate them, get them a full package and get it in and get it out. It's like anything else, time will kill your deal, right? The longer it sits, the more risk there is of something coming up. So I always tell borrowers, you need to be honest and truthful because if you're not, it will come out at some point, okay?
Right.
So we want to get it through that point. So once you get something into underwriting, you're looking at potentially up to 2 weeks, okay? So they have to spread it, pull credit, do their analysis, do a credit write-up. So I call it the fluff, but they have to do a write-up for the files. Why? If they get audited, they have to be able to show the examiners they did their work, right? So they're just showing their work. If they have to take it to credit committee or a loan officer, that may happen as well. Once we get all that back, we will typically either have a commitment letter or a term sheet. Not all banks will issue a commitment letter for various reasons, and I won't get that into here. But at least we'll be able to go back and tell the borrower and the seller side it has been underwritten. And at that point, it is typically down to appraisal, if there's environmental issues, if there's title, and then wrapping up any loose ends, such as doing any copies of leases, addendums of leases, getting insurance in place, and all that. Appraisals ordered very similar to residential. It goes out for a blind bid. We get quotes A, B, and C and D. Let A, B, and C, A, B, C appraiser. Here's the price. Here's the turnaround time. Typically, commercial appraisal can be 2 to 3 weeks with up to a week for a lender to review. So it goes with the question, if I do a commercial agreement, I always say 60 days on conventional. If you're going SBA, 90 days. Give yourself room because you can always close earlier. So I think the last thing is, as agents, you want to do is start passing a lot of extensions and things like that. We keep you in the loop. I have been on phone calls with seller agents to say, this is who we're working with. I've seen the information based on my experience. We should have a very high success rate of getting this. So typically a lender, to kind of finish, they're not going to want to take a deal or a loan to underwriting that they feel they can't get approved. So at that point, once it's in underwriting, unless a credit score issue comes up or there's a property issue, maybe 100 years ago, there was a gas station on there or a dry cleaner or something like that, right? Now you got to go to a different level of phase 2 environmental. So, but it's about 60 to 90 days, depending on the nature of it and also how fast people get us information,
Well, the other thing that matters, and so oftentimes people are like, look, I don't want to use a broker because they're going to charge me extra money and I want to skip those extra fees. But the one thing I learned about doing commercials that, and you could take us however you want, bankers
Yeah,
are lazy. Bankers are lazy.
they
Like the
are.
ones that are sitting 9 to 5, they won't go get it. Like Gary and I only get paid on commission, like when that loan closes, that banker gets paid regardless. So they'll string it out, kind of like, and I'm talking crap on Lexington Law too. Lexington Law will work on one dispute on your credit report until you say uncle. Like they'll keep charging you every month $150 until you quit. When I did credit repair, I got you in and out in 120 days. And it was like a fixed cost. We're getting in, we're getting results, we're getting out. On the commercial arena, these commercial bankers are lazy. So when Gary packages it up, he sits down and discusses with them why they need to take this loan. Am I wrong, Gary?
Yeah, some are lazy. The ones I work with, I've
Yeah.
known such a long time. Like I've had lenders at my house packaging up a deal because if we didn't get it in place, we were going to lose a rate lock. You know, there was a loan offer that was out there.
Okay.
So the lenders I work with, we work very closely together and we have a great open communication. So we're able to, I think, get things done a lot quicker than and so if I get a lazy banker, I don't work with them. I just won't because you have to know your craft, you have to know your credit policies, and you have to know what your committees or credit officers are going to tolerate. So that's who I work with. It's about the people who you're working with that will turn things. I had someone that went to a friend out of Philadelphia. They tried to stick him in a national lender, and he goes, "Oh yeah, my person knows commercial lending." And then, it's the 11th hour, and he's like, "Oh, I can't get it done." He sent me everything. Walked him. I pulled a favor with one of my lenders and said, "Hey, I need to move this quickly." So because the relationships and the volume of deals I do with him, he was able to get it pushed up, and it didn't help. It didn't hurt that he was the best man at my wedding back in October as well.
Yeah.
So,
That helps.
but we've known each other 15, 16 years. So we're able to sometimes push things up, but then you got to have a tight, full package. And then I had to work with the seller side and basically calm everybody down, because at this point, do you want to take it back to market and go out another 90 days, or do you just want to close in maybe 30 days later or something like that? So I also had a relationship with that agent. So it is a lot about relationships, but it's also knowing about what you're doing up front. And
Yep.
every commercial opportunity it could be the same property, but it could pose two different borrowers,
Yep.
potentially have two different issues. So it's really about experience and wisdom and knowing
Yeah.
how to push things through and how to advocate. So I tell people, if you go to court, get an attorney. If you want to talk to a bank, hire me. You know,
Yeah. That's a good call because if you're a person looking for a commercial loan and you're just randomly calling banks, that could take you forever. Whereas if they called somebody like you, you're going to you're going to make it easier for them and you're going to put them in the right spot because we talk about this too, even on the residential side. Not all loan officers are created equal, right? So you could call one loan officer and like, hey, you qualify for straight up FHA and your rate 7%. We'll look at it and go, hey, you qualify for PHFA and your rate's 5.5. And, or your rate 6.25 and you're getting 5% of the purchase price. We're giving you $10,000 interest free because we knew where to look. Like we know the loan programs. And the same thing applies for you. So I got one more question because I know we try to keep it to a half hour here. Can you talk, because I keep hearing this one too, and this is a buzzword. Can you talk about the difference between recourse and non-recourse loans?
yeah. So non-recourse means there are no personal guarantees. Recourse means you have a personal guarantee. I'll just say this, unless you're a 20 million in revenue company, you've got significant management in place, you're well capitalized, you're not going to get a non-recourse loan. There is one lender that I work with that'll do non-recourse on real estate if it's 50% loan to value or less, and they are very conservative on appraisals. But typically, if you're an owner occupied real estate and you got a business in there, they want your personal guarantee. If you got a multifamily or whatever, they want your personal guarantee. And the reason is they want you to stand behind it, right? So if someone were to loan you money, right, you would expect them to stand by it, or vice versa. If somebody came to you and said, loan me money personally, you would want that personal guarantee. So it's really a signal that you will stand behind your word, right?
Yep.
At the end of the day. So it's very infrequent to get non-recourse. If you get up into the larger multifamilies, big apartment buildings, multi-million dollar loans, then you may get into the world of non-recourse. There are some lenders that will do it, but your 1 to 4 families, your small multifamilies, it's essentially a non-negotiable for a bank. So if you want to try to negotiate it, good luck, because
Yep.
you're not going to get that.
Okay.
Yeah.
And then before we close out here, I just want to open it up to everybody here. Anybody have any questions for Gary?
I'm good.
Yeah.
Okay.
Yeah.
And then I just want to show you one more thing. This market's picking up. Hopefully, you guys have seen a pickup in business. We have certainly seen a huge pickup in business and loan applications recently, and contracts coming in. If you're not standing, the goal is standing in front of your past closed database or people that you know. Home IQ is free for you guys for the first 200 people you load up there. I'll just Corey, can I get a screen share real quick? I'll show you the numbers. We loaded up all of our past closed customers. I think it's close to 3,800 people. And if you look at it, let me know if you can see my screen. Can you guys see it?
Yeah.
So we sent 3,500 reports in the past 30 days. The open rate was almost 80%. So it's a great way to stand in front of your past closed customers. There's a ton of great information in these reports, like the value of the house, where is their rate compared to current rates, so that they know if they can save any money. Can they move up? Can they buy an investment property? Can they get a HELOC? Can they buy a second home? There's just a ton of good stuff in there that gives them the information they need to make the best decision for them and their family. So if you're interested in signing up for Home IQ, just let me know. I can send you the link to sign up, and it's free for your first 200 people. And after that, it's still free. It's like, I don't know, don't quote me on it, but it's like 10 cents a person that you load up there. And it just stands in front of your past database. We probably get 15 to 20 people reaching out to us daily because of the report that they get. So it's just instead of you chasing people, like on the first day of the month, I'm going to call my past customers with an A. On the second day of the month, I'm going to call everyone with a B. You're attracting business. You're not chasing anybody. They're calling you. When the phone's ringing into you, it's a whole different conversation than you having to call out to them. And these are people that you already went through the whole transaction with. You took them shopping for 6 to 12 months. You built a relationship with them. You went through the loan process. They closed on a home. You know, it's a monumental event in their life. And this is a way for you to stand in front of them for cheap. So if this is something you're interested in, let me know. The market's definitely coming back. And with the wipeout of people, I know for loan officers, there were 500,000 loan officers in 2020. Now there's less than 90,000. Right. And then this volume is going to pick up, and it's just going to be more for the rest of us. It's a similar clean out for realtors too. So if you're here and you're on this call, that means you want to win. And when the market comes back, you want to be standing in front of your past clients.